And the Forehand Agency. Welcome back to WNIS, Mr. Scott.
Thank you, Mr. Lee, and happy Saturday.
Happy Saturday to you. Scott joins us via the magic of the interwebs, via the Zooms and all of that.
Yeah, because there's a big party going on downtown Norfolk this morning, and we would be captive if we went there, and we'd be stuck in the garage.
This is right. This is right. That's what I am right now. I'm captive until probably about 1 this afternoon because of the Parade of Nations happening right now. So if you're not already in downtown for the parade, don't come down here because the roads are all blocked off and everything. It's not great.
Yep, right
But
on.
if you're down here and you're parading, you're probably having a good time. So that's
That's
okay.
right. And the only thing that's missing that I do miss about not being in the studio is that coffee shop and your presence and the Mike Fitzgerald. So I love hanging out with you guys, and the coffee shop and the at the ground floor of your of the big building that you guys are in is awesome.
It
So
is good. Yeah, it is good. Well,
that
we look forward to
Neptune,
seeing you hopefully back in our studio in a few weeks. Yeah, Neptune's Fury is the name
yep,
of it.
yeah, fantastic. So if you're ever in downtown Norfolk and looking for a place to get a good cup of Joe, Neptune's Fury, and they're not paying me for this, and they didn't ask for this. We're just giving them a nice plug. It's worth stopping in. They've got great scones and they've got really, really good coffee.
They do. This is a free ad, a free plug,
Yeah,
just because we like
and
them.
their view is awesome.
It is.
Yep,
Yeah.
looking out over
Yeah.
the harbor, it's pretty cool. All right, so Mr. Lee, General
Yes.
Lee, you
Yes.
got a show coming up this afternoon, don't you?
I do. I'll be on at noon today.
Yeah, and what are you talking about on your show?
I'm going to talk about AI a little bit. Did you know that they actually have AI radio DJs out there?
I wouldn't surprise me.
Yeah, we're going to talk about that because
Yeah.
I'm scared for my job.
Are you? Hey,
A
look,
little
Lee, if it
bit.
ever comes to it, Paul and I are both hiring.
Okay. All right. I actually might take you up on that as long as you're okay with somebody with zero financial knowledge working for you.
We will teach you. It's okay.
Okay. Teach me
Yeah,
the ropes. I'm fine with that.
right on, man. So, and if AI Lee Foster ever comes up, make sure that you've trademarked your likeness and your voice so that you can actually have a recourse and recoup some of whatever you lost.
Yeah.
I'm just
This
saying.
is this is true.
Right on. Well, as always, not always, but as for the last 3 or 4 years, we're going to start the morning with going over some charts and what's happening in the markets. And we do have a special guest here today. It's Professor Paul Bein, who runs our Atlanta office. He's also kind of our resident crypto expert. Mr. Bein, hi there. How you doing? Can you hear us?
Yes, I can. I'm doing fabulous.
All right.
Um,
How's
yeah,
the
my
weather in
name is
Atlanta?
Atlanta is bright and sunny, and not to be confused with Mr. Bean, but yeah, it's Mr. Bean.
Right. Right. Yeah, I call him Mr. Bean all the time as a joke, but yes, it's definitely Paul Bein. Um, and if you ever get to meet him, he's an awesome fella, and he's Hawaiian of all things, Hawaiian.
That Hawaiian burger joint.
That's right. Right on. And actually, one of my favorite dishes comes from Hawaii, but it's not Hawaiian. It's a loco moco. So anyway, it's a
I
fried
thought you
egg
were
on top of a
referencing
hamburger
spam.
with rice.
I thought you were referencing spam.
I like spam too. Yeah, if you've ever met me in person and seen my girth, you'll understand that I like spam. Right on. All right, so let's go ahead and jump into it. So the first chart we're going to look at is again, this is kind of a generic barometer of what's happening in the markets, and it's the S&P index. And one of the interesting things that's happened is we had that big dip about a month ago, a little bit less than a month ago, and there was a it's not real, but there was a ceiling that was established before that dip happened. And one of the things that some of the economists I follow have pointed out that the market is headed back up to that arbitrary ceiling. My personal opinion is it is not going to make it all the way back there. It's going to continue to rise, but it's also there's some. If we look at the next chart in the series that I'm following here, it's about volatility. And this is not abnormal that volatility slows down as we get into the summertime trading sessions. And we had a big spike at the time of the big loss back in late March, early April. And now when that big spike happened, the market's cooling down. There's not as much interest in trading. There's not as much active trading going on. And as we get into the summertime months, then you're going to have a lot of the folks that are active traders during the school year are actually going to be stepping out. And so the volatilities should probably continue to drop as we've seen right now off of its high on April the 2nd. And that's not good good news if you're looking at a recovery. So the next piece of data we follow is the US dollar. And the US dollar has weakened. We all knew it was going to. BRICS is slowly gaining traction. 2 years ago, if you'd asked me what the average as far as new contracts, international contracts were, the unit of measure or the unit of trade was the US dollar. And that has changed. And depending on who you read, it's now 70% of all contracts are written in the US dollar, or I've seen one person say as low as 50%. So there is a transition that's going, but there is also some good news on that front, and that some of the major players of BRICS were actually pulling out. And so that's kind of it's indicative, I think, of what is probably going to end up being a good experiment that should probably happen, and it's going to shake up the world economy, but it's probably not going to end up being what BRICS proponents really wanted to happen. It's still going to be there. It's still going to be a tool, especially when you have some of those actors that are not necessarily friends of the U.S. Economy and friends of the U.S. government. So those actors are going to still need to do something outside the normal purview, rather than using the U.S. dollar as a means or as a unit to measure the trade that they're trying to do. Next, and this is a big one, gold. So gold has risen a phenomenal amount just in the last year. It hasn't quite doubled in value. This time last year, it was at about 2,800, 2,700. And right now we're sitting at 3,300. So this is a big deal. And if you dig into the reasons why this is happening, what is gold used for? So gold is a safe haven. It is something to hedge against inflation. And it's something, depending on how you keep your gold, whether you're keeping it in a gold IRA, or if you're keeping physical gold in a safe in your wall in your house, or in a safe deposit box, there can be taxes on it, and maybe some methods that you use to avoid taxes on it. But the point is that this is a hedge against inflation. And when you see a rise this fast, it is because the people that are heavy investors in the market are trying to hedge the loss that they see coming. It is also something, I don't have a chart on it right this second, but I would imagine that if you look at the bond charts, the bonds are should be going nuts right now too. So because gold has risen so much, and it's risen a lot just in the last month, it's risen 250, almost 300 points in the last month. And that's a lot for gold to move in 1 month. Normally gold, if you go back to 2021, 2022, the movements are more staccato-like, and you're seeing movements of maybe 100, maybe 50. But now, because everything's so volatile, the gold is responding. And if you're holding gold, fantastic. Don't sell it. You should always keep it to hedge. All right. Next. So there's a kind of what we've always talked about on this show. We talk about the couple of the pillars of the economy. We talk about how, you've got durable goods, and you've got retail sales and all that stuff, which is part of the economy. But the big kind of driver for the economy is really the housing market. And when houses are gaining value, that means collectively the country is gaining value. And when houses are losing value, then the opposite is happening. House sales, home sales, and mortgage rates go hand in hand. So we know we've seen an incredible increase in mortgage rates from 2 or 3 years ago, where I've got some of my clients that got mortgages in the twos. They got not 30-year, but they got 20-year or and 15-year mortgages in the 2 to 3% range. And I told them, you're never going to ever see that again. Don't ever sell your house. Don't ever get rid of that mortgage. Do whatever you can to keep it forever, because that's really cheap money. And now we're seeing interest rates 6, 7, 8, 9. And this is not, if you, in the grand scheme of things, if you go back in time, this isn't abnormal. If you went back into the 70s and 80s, you saw interest rates, mortgage loan interest rates, 11, 12, 15, 17%. So this is not abnormal in the grand scheme of things over the last 100 years. Actually, this is about normal, not abnormal, but normal. And this is probably where we are right now. The mortgage interest rates, I can see the movement up and down over the last 6, 8, 10 months. And when I talk about staccato trading patterns or staccato chart patterns, and all that means is it's going up and down fairly quickly, but not a lot of movement. And that's what I'm seeing. I'm seeing the range for the last almost 2 years, going back to December of 22. I'm seeing the range of mortgages move between 6.25 and 7.5, up and down, up and down, up and down. And that's kind of when you see that, we're getting really two things. We're getting a ceiling, an arbitrary ceiling, which is about 7.25, 7.5, and we're getting an arbitrary floor, which is about 6.25, maybe 6. And that is probably where we're going to be for a while. And I know, Paul, you had some significant experience and used to run $1 million programs, mortgage lending programs, and things like that. This is kind of up your alley. Do you have any comment on that mortgage interest rate leveling out that we're seeing right now?
I mean, the challenge obviously you hit up good points. The bonds, where they're at, where markets are, and so forth, and supply and demand. I don't foresee rates coming down really in the near future until obviously the Feds have step in, and but then we deal with a little bit of a potential inflation, hyperinflation on top of that. So in regards to rates, we're never going to see 2% again. Hopefully I'm wrong. This is not financial advice.
Right.
But there's other ways you can leverage, but don't rely on equity on your house to leverage, the equity that you have in it.
Okay. Yeah, that's good. A good point there. And something you just said, Paul, if you don't know or understand the word that Paul just said, which was hyperinflation, I would direct you to go read some history, specifically read German history from pre-World War II. What I'm talking about specifically is the Weimar Republic. And the Weimar Republic experienced hyperinflation, which is one of the things that precipitated a war. So, and I don't think we have so many checks and balances in place here in this country that are designed to avoid that, like the plague. But do be familiar with what that means and what it could mean. So we're seeing inflation rates, the Fed's goal is 2%. We're seeing 3.5, 4.5% now. And at the ceiling during the Biden administration, it was up to 9, I think. That's not hyperinflation. Hyperinflation is 25, 50, even 100%. And that is untenable. When you have to pay, in that German example, people were paying the equivalent of $1,000 for a loaf of bread. And we can't go there. Never again, ever. And that certainly had a trickle down effect to the rest of the world, because all economies, all state economies, and by state I mean the country. All countries' economies are actually intertwined to some degree. And so what happens to us affects the entire world. And what happens in, say, Australia certainly affects us to a limited degree, but it affects the Pan-Asian markets even more because of their regional location. So this is something that you should be aware of it, be considerate of the potential for it to happen and the significantly reduced potential because we have checks and balances in place. But again, going back to the home sales side, I see a leveling out of the home sales and I see a leveling out of the mortgages hovering between that range of 6 and probably 7.25, 7.5%. So if you were thinking to yourself, I'm going to wait until it goes back down, well, you're probably going to be waiting for a while. The last time it was actually lower, not trading, not moving within the current track, was actually June of 22, right when we were coming out of the COVID stuff, and it dropped down. It was in the fives, but that's it. And I don't know that we're going back there.
Hey, Scott, can I speak to the real
Go
estate a
ahead.
little bit more?
Sure.
So a lot of perception is challenging for, what's going on because everyone sees these new projects coming out of the ground, huge subdivisions, a lot of development going around. And how can that be with, where rates are? Just think about these developments were planned years in advance. And the money was already funded and put aside for these events. Here's the challenge, and this, like I said, this is not financial advice, but the bigger concern is that there's going to be too much inventory and then the access to those properties because rates, so where rates are. And less people are moving, they're spending more money on developing in their own houses. In a year or so, it may be, there might be powers that be that will have to force a stimulation to recharge the real estate market because you see signs of that throughout the country already, and highly expensive homes that is unaffordable, especially 2 plus 2 is not adding up to 4 in many cases for a lot of individuals. So just keep that in mind, and have discernment and be very do your research, and if that's the direction you want to go. Sometimes just sitting on the sidelines and waiting and seeing where things are going is uh, not a bad plan either.
Yeah. Yeah. There's certainly something to be said if you follow the big investors and the Warren Buffett level of investors, you can see what he did. And he started doing this about 2 years ago. He started taking money off the table and he started putting money into cash positions. And when you see Warren and other people that have done the same thing that he does start pulling the trigger, buying real estate, buying they're called REITs, real estate investment trusts, which is a tradable thing that you can purchase within the stock market. When you start seeing that kind of stuff being purchased, then that's the time to jump back in. So I let the guys who have a lot more brain power than I do kind of guide me, and that seems to be a pretty safe move. Last couple things I want to go over as I get ready to sneeze is the S&P 500 again.
Good job. Good job. Never waste a bodily function off the air. I've taught you well.
Thank you, Mr. Foster. I feel educated, right? There's some bodily functions I think really just shouldn't happen on air. And if you've ever been in a lot of Zoom meetings, sometimes you'll hear people that take that bathroom break and forget to turn their microphone off, and that's
Whoops.
probably a noise we don't need to hear.
For cameras.
Or their cameras, right? Right. That's funny how the world has changed because of Zoom. All right, last two charts, and then we'll get moving. So the S&P, when we look at a chart, there's a thing called a Bollinger Band, which kind of dictates the upper and lower boundaries of where the chart should be moving within a specific period of time. Then there's things called slow moving averages, and there's another thing called an EMA, which is an exponential moving average. And when you take into consideration all these things, sometimes when you put these different averages, moving averages, limits on a chart, and you track where that whatever you're trying to chart is moving on that chart, you'll see some of these lines crossing. And in charting terms, that's called a lamination. And when you see a lamination, that actually sets a new point of resistance. Whether if you're above that lamination, it means that you have a new floor. If you're below that lamination, it means you have a new ceiling. Well, folks, bad news. The S&P had a lamination on when was that? The 25th of March. And that lamination was at 50, it's like 5,400. So that actually is setting the new point of resistance for the market to move up. So if I look at where the market, the S&P has been for the last 3 weeks, it had its biggest dip all the way down into the mid 4,000s back just before mid-March. And then it came up a little bit. It showed what we call a head and shoulders pattern, which indicates a downward move. And then now it's on the back up swing, but it's swinging up to that lamination, which tells me it's going to bounce. It's going to hit. You're going to hear some good news, some good things are going to happen. You'll see something that causes the market to move up just a little bit, and then it will hit that rubber band, if you will, and actually start to head back down. There's one more thing, one more chart that supports that analysis, which is a technical composite, S&P technical composite over the last 24 months. And the reason why I say this particular chart supports that analysis is because of where the track line has moved. And again, we have Bollinger Bands on the big chart, but this is a very focused chart on a month-to-month basis. And we have hit this resistance point a lot in the last 24 months, which means to me, it's almost there again, that it's getting ready to hit whatever the arbitrary, it's not going to be arbitrary, it's going to be real after the fact, but whatever the new ceiling is going to be, and then head back down. So the S&P 500 is on an upward trend right this second, but it should reverse and then probably come back down until there's some kind of good news event, like the Russia-Ukraine war ends, Hamas officially gives up, Hezbollah is officially gone. There's all kinds of stuff out there that can prompt that sense or exuberance of positive energy that causes people to get back into the market with gusto. And that is your technical chart analysis for the show. Paul, any comments generally?
I got nothing.
Okay.
Charts, we'll get into when we talk a little bit about crypto. I think a chart that everyone should be, if they're getting into charts and if they want predictors of where markets go, and there's no crystal balls. And like I said, this is not financial.
Okay. Awesome. Mr. Foster?
Sounds like people should call you guys and maybe set up a consultation.
I like that idea a lot.
Phone number 757-278-1264. That's 278-1264. Or if you're outside of Hampton Roads, 1-800-677-0989. That's 1-800-677-0989. Their website, forehandagency.com. We got more with Scott Forehand and Paul Bein from the Atlanta Forehand Agency coming up on News Talk 790 WNIS. News Talk 790 WNIS. We are here with Scott Forehand. Paul Bein is with us from the Atlanta Forehand Financial Office. Scott Forehand right here in Hampton Roads. Actually, Scott, I think you're in Edenton now, right?
I am in Edenton. I'm looking out at the lake. I just saw a fish jump. There's birds eating bird seed out of the bird feeder. The dogs are outside chasing the birds, and my wife has planted a brand new vegetable garden right in front of my window, which has some butter crunch lettuce and some sage and curry, of all things, curry plants in it. It's pretty cool.
Edenton is lovely.
It
So
is.
Scott's down in Edenton, but you help everybody in the greater Hampton Roads or Northeast North Carolina area or anywhere else for that matter. Those numbers 757-278-1264 if you're in Hampton Roads. If you're outside Hampton Roads, 1-800-677-0989 and the website is forehandagency.com. And those are important numbers. That's an important website. If you want to get the invite for the class that's coming up this week, every time we do a radio show, there's a class that comes up the following week. It'll be this Thursday at 5:30 p.m. This Thursday, that would be May 1st at 5:30 p.m. And it's as simple as that, right? People call, they get the invite. Tell us what you're going to be talking about this week.
Right. So for this class this week, we're going to be talking about specifically about infinite banking programs and the different styles. There's a infinite banking program called a debt-free life program, which is a proprietary program offered by Symmetry Financial Group. There's also an infinite banking program called a cash flow bank, which is what some of my wealthier individuals use so they can have their constant nest egg growing. And then there's just a traditional infinite bank so that you can use it as kind of a hybrid. You can use it for anything. So we were talking about those different programs and how you can set them up, how we set them up. We do have a special guest scheduled for that. There's one of the companies that we use to structure infinite bank programs is called Mutual Trust Life Solutions. They're part of a much larger organization called Pan American Life, which does business all over the Western Hemisphere. And we have one of their regional vice presidents will be joining us, Professor Mark Creighton, and he'll be coming on to speak with us about the Mutual Trust Life Solutions version of an infinite bank. So that's pretty
So
exciting.
yeah. So if people want to learn, all they have to do is go to the website or call those numbers. You'll get the link sent to you, and then you can be a part of the class.
Yep.
And you do these. If people can't make it this Thursday, you do them pretty much every month. There's former videos that they can find. They can search you up on YouTube and find you that way too, right?
Yeah, we've got a big YouTube presence. There's probably, I don't know, maybe 200 hours of recorded classes and videos up there. We also have a fairly large TikTok presence. If you follow people on TikTok, feel free to check my stuff out. We do put up several little 1 minute clips or so every week, and it's usually something impactful. And you just sign up, like it, and join our feed, and then you'll be able to get that stuff as it comes out.
Boom.
Yeah, and finally, there's we were talking in the last segment about charts and charting, and there's Paul. I have an immense amount of respect for Paul and his knowledge base, which exceeds mine in many areas, and I wanted to have Paul here to talk about crypto, but there's something that I think a lot of people are confused about how to do any kind of prediction with crypto. So we're gonna get Paul the podium here and give him an opportunity to take us to school a little bit on where you can go and look at some of that stuff that's going to tell you what crypto is and how it works and that kind of stuff. Dr. Bein, you still there?
Yes, I am.
Right on. Let's hear it, buddy.
What I would start out is just something that came across my mind is, people may feel like they're too late to the game. And where Bitcoin's at, Bitcoin has some more highs. Obviously, this once again, this is not financial advice. I don't have a crystal ball, but I like levels of probabilities, and measurable things that are indicators. Um, but here's the thing is that this is a fact. Less than 5% of the world's population is in crypto, digital currency. So you're not behind. This is a perfect time right now. There's more of awareness going on that. So I would spend the time, do your due diligence, do a little bit of education. We have opportunities for that, through the Forehand Agency, and we can have further conversations. But one thing I'll share with you is how did all those individuals know when to pull their money out of the markets? And why did markets suddenly go down? There was this event in November that happened and markets took off and then suddenly retreated. There's something that's called that most people don't know. It's called the M2 chart. And the M2 chart really talks about year-over-year growth of global money supply, including cash, deposits, even small deposits under $100,000, money markets, and so forth. And it's about the money supply. When and there's a predictor on it, and usually there's 72-day, 108-day charts. If you look at the 108-day chart, if you get a chance to look at it, where the markets are right now, they're exactly following it. Because what 108-day means is that it's a predictor, is that when markets will change, and with crypto, especially because Bitcoin is right on that track. Um, you're gonna see the ups and downs through that. But it in 108 days is where this money and this change will transact. Why is that? Because you have different world governments that print money just like we do, and that money takes 172 to 108 days to get into the circulation. And now it's going to start appearing, and then you're going to see the growth inside of that. The other thing too is that when you see markets change, just like in how crypto went down, if there's not enough buyers and sellers, there's a reflection of that. And in this M2 money chart, you have seen the decline of crypto. There's going to be a uptick, which is a false flag, what Scott was talking about. It's going to come down. Here's the challenge, and this is just 101 of investing in anything. Don't buy into highs because you will lose, but always buy into the dips. Wait for it to come back, because everything that goes up will come down and settle, and wait till it drops and then get back into it. And you can reinvest in the dips, and it's going to go up and down, but the gradual growth. But based on this chart, I feel really confident that in the next year or so, we're going to see continuous growth. So there's going to be good opportunities for individuals, but educate yourself before you get into crypto. There's another indicator. It's called, you can Google it. It's the fear and greed indicator. Fear means when it's doing really well, that's greed. And it's been in the fear section for a while, but people start selling, they're getting worried about their positions, and they panic sell. Don't panic sell, because you're supposed to buy low and sell high, but people buy high and then sell low because they're trying to get out of it. But that's inherent nature of ourselves. And that's something that you have to retrain and rethink about it. Now, talking about Bitcoin just went up to 94,000. It
Yep.
was as low as 68.
Yep. And
It,
not
it's
too
going
long
to
ago
do,
either.
yeah. And that was all on the M2 chart. It came down, it's going up a little bit. It's going to have a little bit of false flag. It's going to retreat. And then to Scott's point, because there's other charts that measure that, it's going to bounce. Now, it could be May, it could be June, but if the best thing you do in crypto or in any kind of investment is dollar cost average into it, and be systematic on that approach. Now, what coins to get into, and I'll give you some really brief education. There's meme coins, which are highly volatile, and those are all based on social presence. You got, I don't know if I can say it as fart coin, but I said that anyways. It's really popular because it's a cool thing, and there's a social media behind it, but it has no physical, tangible anything, just air.
And it doesn't do anything.
It doesn't do anything
Right.
but maybe what the word says, right? Secondly, and you can argue that about Bitcoin. What is that? But gold has a value. It's a perceived value of what everyone feels that value is going to be, and it's going up, which is great. Same with Bitcoin. If you're going to use a gold standard, Bitcoin's kind of the gold standard of crypto. There are other cryptos that there's companies that raise capital through tokenization, which is crypto. You already heard some big financial people talking about switching investing into crypto style or blockchain technology. And ultimately, that's something, if you want to, there's dummy books out there, how to cut your lawn by, dummy proof or whatever the name of it is. You need to learn a little bit about blockchain technology, because that is the wave of the future. Everything that, people are talking about technology, there is autonomy with that, but there's accountability because everything is recorded on a ledger on that blockchain. So that's a good starting point if you want to learn about crypto. And then look at companies. What are they investing in? There's decentralized and centralized. That's a whole nother conversation, what that looks like. But there's companies that are giving Amazon a run for their money by building technology that you can share bandwidth and they'll pay you back bandwidth, what unused bandwidth. It's like a solar energy, same thing. There's other companies that use VPNs that are designing VPN technology that you can share bandwidth on that and they pay you and you can earn dividends. Here's a cool thing about crypto too. There's things that are called staking that you can earn high APRs on it and they pay you back in tokens and it's liquid.
Staking,
And
stake,
staking,
like you drive a stake, staking.
yeah, not like the steak you eat, right?
Right.
Staking. I'll slow down because I'm getting a little excited. I love this, and I'll slow
It's all
down.
good, Paul. Unfortunately, we only have an hour.
Yeah, that's fine. But just do your research. There's a lot of opportunities. Talk. Oh, here's one thing. I'll be cautious though. You hear a lot of influencers pushing a crypto. They get paid for that.
Yep.
So it may not be it may benefit them. They may have links to register and so forth, and use their exchanges. But do your due diligence. And I'll share this too: is how to buy crypto. There's a lot of different exchanges. You can do your research,
Do
but
your research. We're not going to recommend any of them here.
yeah, no, but there are really they have educational programs. There's a lot of stuff on YouTube that you can do for research, but really research an exchange. And a little side note too, there's two kinds of wallets out there. There's a cold wallet and a hot wallet. Cold wallet means it's on the internet. Any chance you have, pull your money off the internet because if the internet goes down or you can't, that exchange goes down, which you can lose your tokens. But that's just in trading as well. Um, there's a hot wallet that it's like an external hard drive that you can save it that has security measures. That's how you want to learn how to secure you're going to make that investment, how to secure it, how to lock it down and make sure you have access. And it's highly sophisticated passwords that you need to have good
Yeah.
storage facilities for those
That's
passwords.
that guy in England who was trying to recover the hard drive that he threw in he got thrown away and he was trying to buy the garbage dump where the hard drive went into so he could go find that hard drive to recover his hot wallet that was on a hard drive he threw away.
I thought his girlfriend did that.
What now?
There's a lot of rumor. I thought his girlfriend threw it out.
I don't know, but I know that it was for real because they had to have a judge rule that he could not purchase the garbage dump. I
Yeah.
remember that. That was pretty interesting. Well, thank you, Paul, for joining us and giving us some insight into crypto and some really good nuggets there. Um, we have just a few minutes left, so we want to get into our other discussions about retirement. That's what this program's about. So we want to talk about different types of retirements. One of the things we had a television appearance a couple days ago, and we talked about Roth IRAs, individual retirement accounts. And what we were talking about in that particular show was the difference and what's better than a Roth IRA. And it's another kind of Roth IRA, which is actually called a Roth annuity. And the reason why it's better is because a Roth annuity guarantees no loss. So Roth, whether it's a Roth IRA, individual retirement account, or Roth annuity, individual retirement annuity, they both offer the no tax, which is important, but one of them will guarantee your whatever you put in there. The other one will not. A Roth IRA can lose money. And actually, over the course of a 20-year run, a Roth IRA will lose significant amount of money about 3 times. When I say significant, I mean somewhere between 20 and 40%. There will be 3 different dips over a 20-year run where you're going to see a 20 to 40% drop in the value of your IRA. That's because in a Roth IRA, your money's invested in the market. And if your money's invested in the market, you have a high upside potential but you also have high risk, which means you have downside potential. In a Roth annuity, you shave off some of the upside potential and you completely eliminate downside potential. So that's one of the reasons why when people have mature Roth accounts and we're getting close to retirement, close being 5 years or more, between 5 and 10 years, we want to start thinking about moving money into a Roth annuity, so that you can guarantee your nest egg. And finally, that the thing that word annuity, don't be afraid of it. There's different kinds of annuities out there. There's ones that people have heard of where people lose their behinds. That's called a variable annuity. We don't do those. What Paul and I do, we don't put people in positions where they can lose money, and that's not what this is about. That's why we talk about retirement. In retirement, the importance is the return of our money, not the return on our money. And we want to put people into a position where you know exactly how much money you're going to have and when, so that we don't have to guess whether or not we're going to have enough money to retire, if we're going to outlive the money that we've saved. So that's a Roth. The last thing that we talk about when we talk about traditional financial planning, we talk about diversification. We want diversification. We want to not necessarily be stuck with one tool in our tool belt. And unfortunately, a lot of people that get spoken to think that because they've got their money in a diversified IRA, because they're within the IRA, they're in equity positions, maybe they've got a bond fund that they're participating with, whatever. That's not really a diversified program because you're still in one IRA. So when we talk about diversification, it's not just where's the money invested within an IRA, it's what vehicles are we in? Do we have, again, going back to the Roth, do we have a Roth annuity? Do we have a infinite bank, if you will? One of the key things when we meet with our clients is we look at debt load and what your debt looks like. If you are retiring soon and you're retiring with debt, and if you have a mortgage, ding, 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 you have debt. If you're retiring with debt, then wouldn't your retirement be a heck of a lot easier if you didn't have any debt? If you think about it, if you're making a $2,000 a month mortgage payment, of which probably 2/3 is principal and interest, so we'll say just call it $1,500 for easy math. Wouldn't it be a heck of a lot easier to not have to pay that principal and interest payment while you're retired? That's the equivalent of giving yourself a $1,500 a month raise, which is over the course of a year, that's $18,000 a year. Okay, so there's an absolute benefit to being completely debt-free when you retire, or at least having a window or a guide or a specific plan to be debt-free at some point in the near term of retirement. And then finally, the last thing we talk about, what are your income streams going to be? Is Social Security one of your pieces? Are you concerned that Social Security is going to be there? I'm not trying to scare you. I'm just being real. Federal government's already announced that in 2034, the amount that's paid out on Social Security is going to drop 22%. Whether or not that changes or not, I have no idea. But the point is they're already telegraphing that. So if they're already telegraphing that and your sole source of retirement income is going to be Social Security, you might want to rethink that process. Maybe you should give us a call. Lee,
Maybe you should. 757-278-1264 is that number. If you're in the Hampton Roads area, that's 757-278-1264. Or if you're outside Hampton Roads, 1-800-677-0989. That's 1-800-677-0989. His website, forehandagency.com. Scott Forehand, always good to see you, man.
General Lee Foster, it's a happy day. It's a happy Saturday. Anytime I get to see your smiling face.
I agree, sir. Same to you. And Paul Bein has been our guest all the way from Atlanta.